What's up, guys? It's Rob here, and we have to talk about Vinco Ventures, ticker symbol BBIG, because this stock is getting a lot of attention and a lot of people are wondering what's going to happen with it. So let's take a look at the chart right here. You can see that we have been pumping up massively over the past 30 days, really. We were down at $2.12, and now we are up around $7.75, but we were up around $11.90 just in the recent past. Now, this stock has a lot of people excited because you can see there's actually a pattern of we pump up and we dip down, and then we make even higher highs in the past. And that's happened once already. Will it happen again? A lot of people are wondering. Now, I do have some thoughts on Vinco Ventures and BBIG of my own, which a lot of people may not be talking about because it may not be the most popular opinion to delve into some of these topics, because a lot of people just want to hear the moon talk. They just want to hear, oh, this stock's going to the moon, there's nothing that can stop it, and there's no downside. Now, there's a lot of potential that BBIG has. Now, that doesn't mean that there's no risk or no downside. Potentially, this thing could be on its way down eventually, right? We could see this fade away if this thing doesn't get enough attention and enough buying pressure doesn't continue keeping the stock up, because a lot of institutional investors will want to be pushing this down very soon, because not only are they locked in short positions, but they also have some options contracts that they've sold that we're going to talk about later in this video. So first, let's look at BBIG and see what's been going on with their short interest, right? Their percent of float shorted is 19.78%. That's a little bit lower than it was before this weekend. Today is Tuesday. We just had Labor Day weekend. I hope you all enjoyed that. And you know, some of the institutions probably didn't, because it looks like they closed some of their short positions on BBIG. And, potentially that was why we were up a little bit earlier today. We were up around 4%. So potentially that was them closing some short positions, because they do not necessarily want to get caught in a short squeeze, and they might want to have some more capital available to short this thing later on if they really need to push it down, because there are some key levels that they'll want to be pushing this thing to. Now, we also want to take note of the search history that BBIG has gone through. You can see that BBIG is pretty popular on the internet. A lot of people have been searching it more recently over the past day or so. Over Labor Day weekend, a lot of people weren't too interested in the stock market because the stock market was closed, so that explains this dip that we had here. But it's good to see that we have returned to higher levels of search content, right? This is Google Trends, and this is tracking how often something is searched and what it ranks as, right? So we can see that BBIG is doing fairly well, right, in the past, and especially during some of the pumps up. When it was making new highs, it was getting a very high search ranking. And, we can see that we have kind of bounced back now that it is Monday and the stock market's open again and people are doing more research. So that is an interesting statistic to look at that I like to keep track of every now and then. So what we have with BBIG, Vinco Ventures, is the possibility of a short squeeze, right? That's always possible. I think that it would be very difficult to get because, as I explained in the last video, the percent of float shorted is 19%. The market cap is 550 million. You can actually see the short interest is about 11.67 million shares, right? 11.67 million shares of this stock have been shorted. If you multiply that by the price, let's say it's $8 times 10 million shares, that's about $80 million worth of short stock, right? Stock shorted. So that's not the largest amount, especially for some institutions, and especially considering the fact that a lot of institutions probably have that amount split between them, right? It's not one institution shorting $80 million worth. It's probably a bunch, and that's going to be difficult to actually cause a short squeeze with, because if you don't have enough value in their accounts being shorted, then, even if you triple the price of the stock, then, maybe they have a $10 million short position, maybe the 10 million turns into 30 million, and that's not actually enough to trigger a margin call. So that's what you have to watch out for with these short squeezes on these small market caps. I'll warn you guys about that. So now we can actually analyze the possibility of a gamma squeeze on this, because we have to look at the options activity to do that. So you can see September 10th is this strike date, and we have the open interest column right here. You can see that there are several thousand options contracts, open interest call options for September 10th. Now, this is, it's a decent amount of options contracts, because Vinco Ventures has gotten a lot of attention lately, and obviously people are going to be trading. Now, this is set for next Friday, right? This upcoming Friday in 3 days are when these all expire, and you can see that there aren't actually like too crazy of an amount of them, right? 3,700 here, 3,400 for the $8.5 call options, 7,000 for the $9 call options. That's actually the most numerous that we have. And, it goes all the way. Some people think this thing is going to 15, and there are about 4,700 open call options on that. Now, it gets really interesting when you look at September 17th, because you can see that there are so many more open interest call options for this. And actually, a lot of them are in the money. 40,000 open interest call options for 7.5. Now, this is going to be a key level, right? $7.50 is going to be a key level for Vinco Ventures looking over the next 2 weeks about until those call options expire, because those institutions that have sold those call options do not want this thing above 7.5, right? They want to collect all that premium, and for those call options to expire worthless essentially. So 7.5, I think, is going to be a very key level. You can see that it's actually acted as resistance several times, or as resistance, but also support several times. You can see on this day that we pumped up, we dipped right below 750, and that actually led to our pump. And then over here again, we bounced off of it post market, and we bounced below it for a little bit yesterday, or not yesterday, but Friday, and we're unable to sustain that. Bounced back up in the post market. After hours, we bounced down to it again, and today we haven't touched it quite yet, but we're getting close. Now, I do suspect that $7.50 is going to act as a quite difficult support to break, because there are 40,000 of these contracts, and that means this probably isn't just retail, right? There are probably some hedge funds and other institutions that are betting that this thing will go up and that want to get in on the short squeeze and potential gamma squeeze that we have going on. So my suspicion is, these 40,000 contracts aren't all retail. Obviously, some of these are going to be institutions, and they are going to want to hold this above 7.5. So this is basically a war of the institutions that we have, right? Because there are actually a bunch of other very numerous open interest call options, like we have for $9, $10, $11, and all the way to $20. We have 39,000 open interest call options right here. And this is where we see the real gamma squeeze potential, right? If this thing just keeps going, if it keeps ticking along, gets to $8, $9, $10, and keeps essentially setting off all of these options contracts, not necessarily that they get executed, but that institutions then have to start covering their positions. The institutions who have sold these contracts will have to hedge against their selling of those, because if this thing goes up, even higher and higher and higher, and they haven't hedged against those positions, then they're going to be in big trouble. So as a stock rises, typically institutions are forced actually to cover by their brokerages after a certain point. So if this thing keeps going, we could really see a gamma squeeze on BBIG, and that's what I think there is a lot of potential for, because we haven't actually dipped that far down from the highs that we've made, and we have made two different sets of highs, right? We made highs of around $10.34, and then more recently $11.90. I think that BBIG could continue squeezing up potentially, especially considering the gamma squeeze potential that we have on this. The short squeeze is not very compelling to me. However, I think that potentially, if the gamma squeeze gets large enough and drives up the price enough, we could see maybe a little bit of short squeezing going on. But really, I think that would have to be, we'd have to see an incredible run up for the short squeeze to actually be relevant at all, really, because I don't think institutions are going to worry about covering that unless this thing looks like it's going up and is going up and is going to stay up. So that's what I have for you guys today. Thank you for watching. As always, guys, you have to trade cautiously on BBIG. Don't get overzealous with these. Only trade with money that you have available to lose and are willing to risk. So thank you guys for watching. If you enjoyed the video, feel free to like the video and subscribe to the channel. I'd really appreciate it. And other than that, I'll see you in the next one. Have a great day. Bye.